Hi students, welcome to Computerized Accounting, Accounting 1115. We are going to do a quick video kind of going over your homework assignments. Kind of wanted to walk through real quickly the steps for your first homework assignment from chapter 3. And then I'll do a separate video and we'll kind of go over the homework for chapter 2. So the first things I want is to kind of help you see some of the things may look different in your book than they do when you go into your company in QuickBooks. QuickBooks, they do an update. So their website looks different, but the book is the latest edition of the book and the book's not updated with the changes. So sometimes that happens. So this video is to kind of help you navigate even with those changes. So step one of my company is pretty much already set up. I'm using an old company that I've been recycling over and over again to kind of do these videos when the QuickBooks Online changes. So the first thing you're going to do is in case one, it says that you are a company, your company's distributor, and you distribute surfboards, and you're located in La Jolla, California. You do not collect sales tax because most of your companies are resellers. So we're going to go, first thing we're going to do is when you log into your company, this is how the company should look. You should have a company for case 1 and a company for case 2. All right, and in each case, at the end of each chapter is a continuation. So you will always use your company titled case 1 for your case 1 assignment, and you'll always use your company titled case 2 for your case 2 assignments. Because as you see, when we go from chapter to chapter, they build on each other. It's a continuation. So when you set up your company, you are to leave your industry box blank. And this business is a fictional business, and we've started it in the future. So this business, we're going to begin in 2023. And we're going to use QuickBooks Online starting January 1st, 2024. So all of our beginning balances are going to be dated December 31st, 2023. So first, we got to make some changes to our company. So based on what hopefully you've learned using your sample company and test drive, you're going to make some changes to your company. So the first thing you're going to do is you're going to modify settings. And you're going to do that by clicking on the gear icon and coming over here and selecting Account and Settings. All right, so it's going to open up a new window. So you see already highlighted is Company. So in Company is where you can change your company name. You can go ahead and select Tax Form 1120. Email. This is really, not important. You're not going to actually receive emails on this. If you are trying to set up your company and it's asking for an email to set up your company, and you use your student email for one, you can use your personal email for the other. I've had some students say that they've hit some snags. It doesn't matter which email you use, it's fine. But the main thing I want you to do is make sure that your company name is named case 1 with your last and first name. And for your tax form under company type, you're going to go ahead and select form 1120. And that's really the only modifications you're going to do here. The next we're going to do is going to come over here and we're going to scroll down to where it says sales. And we're going to make sure that we're going to turn on our track inventory. So right here, it's track inventory quantity on hand. We want to make sure that's turned on. So what this does is automatically shows items on the expense and purchase forms. Okay, so once that's turned on, we're going to go over here and we're going to go to expenses. Now it's to turn it on and off. Okay, real quickly, I just want you to show when I click on it, you just hit the toggle. You just hit the toggle. Okay, that's all you have to do. So you want to make sure what I have turned on here is showing the same thing for you. All right. So now we're going to go down to expenses. And under expenses, we're going to make sure that we can track expenses by customer. So right here, track expenses and items by customer, that's turned on. Make expenses and items billable, right here, we'll make sure that's turned on. And then default bill payment terms is going to be net 30. So we've already selected that, but if you need to select it, it's simple. You click on it and there's a drop down menu and you select net 30. Now, we don't charge sales tax. We said that at the beginning, that we're not going to collect sales tax because our customers are resellers. So the only thing that should be clicked is track billable expenses and items as income in a single account. And then we do want to make sure these are turned on. And then we're going to turn on purchase orders because we are going to use purchase orders, but we're not going to use any custom fields. So this is how it should look when you click on it. All right, now another change is it has you clicking on advanced for time tracking, but we have a new segment called time, and that's what we're going to use for time tracking. If this pops up, just dismiss it. And just go ahead and say, don't show me again, because we don't need to see that. So we're going to go to the timesheet and we're going to turn on service field to timesheets and allowable time to be billed. So we want to make sure these are turned on. All right, so once that's done, we can go ahead and exit out. And what we're going to do now is we are going to create new accounts and related beginning balances. So you can click on this icon and go to chart of accounts. That's one way to find your chart of accounts. Okay. Another way to find your chart of accounts is come down here to accounting, and you can click on chart of accounts there. So there's two ways to get to your chart of accounts. All right. So here's your chart of accounts. Ignore this amount I have down here. Again, I told you I recycle this company. So if you have a zero balance there, that's fine. You should have all zero balances in your accounts at this point. So I didn't want anybody to be confused and see that amount and think they're supposed to have that. You don't. But the first thing it has you do is it wants you to set up an account type called bank with a detail type of checking, naming it checking, and having a beginning balance of 25,000 with an as of date. So how do we do that? All right. Well, we do already have an account that's a bank type, detail type, and name that all match. So we don't need to create a new one. All right. So you can click on the drop-down menu and come over here and click edit. All right. Now, I'm going to exit out really quickly. If you don't already have one set up, if you don't see one already set up, and if you're not sure, you can come up here and start typing in the name checking. Okay. And that's, you can see if you've already got an account in your company with the name checking. If you don't already have an account with the name checking, you'll come over here and click new. All right, so how would you set up a new account? All right, so you click on the new. All right, we know the account type is banks because it says account type is banks. So we're going to hit banks. All right, what type of account is it? It's a checking account. Notice I clicked on a drop-down menu. There's really only two options. So we know it's a checking. So we're going to hit checking. What is the name? Well, it tells us it wants us to name it checking. So we'll name it checking. Okay. Now, we already have a checking account, so I'm not going to save this. I'm just showing you the steps. All right. So now it says start date and opening balance. Go ahead and click on that. And it's going to say, what date do you want this to start? Okay. So you're going to click other date and you're going to type in the date just like that. And then what balance? We're going to put in 25,000. You don't have to put in decimals or commas, and then you would click save. Okay. And that's how you would create a new account. Okay. but we're not going to create a new account because we actually have an existing account already set up. So I'm going to show you how to modify an existing account. So you're going to come over here and you're going to click the drop down menu and click edit. Now, do you see this window that just popped up? It looks very similar to the window that popped up when we said select create new account. All right, so we have to modify though is the starting date and the balance. So it's just like when we started a new account. We're going to click on other date so we can type in the date that we want to use. And then we're going to type in the balance and click save. Now we have an opening balance for our checking account of $25,000. Right. The next account it wants us to open up is fixed asset. So let's look for any fixed assets. Okay, we don't have any account named fixed asset. So let's scroll down here to under type and look at all the fixed assets we have. So we do have an account already set up. I set this up so that I can send out some screenshots to you guys. All right, but let's go ahead and just open those up and look at them. So what we're doing with this fixed asset entry, okay, is that we are creating an asset that we already have. We already have this asset. We're not purchasing this asset. So it's a little different. We will go over how to record an asset that's been purchased, but we're starting out already with this asset. So we just need to manually record it and set up the account for this situation. So it's a little different. So the first thing we're going to do is the type is going to be asset. We're going to select fixed assets. Okay. The detail type is going to be furniture and fixtures. Now it says to name it original cost. I know it says to name it original cost, but this is where I want us to modify a little bit. I do not want us to name it original cost. I want you to go ahead and name it furniture and fixtures, and you can put into the description original cost. All right. Okay, so now that's how we're going to set up that fixed asset for furniture and fixtures. Next, we're going to do is we're going to set up depreciation. All right, so when we go to set up the depreciation, we're going to click assets. We're going to save it under furniture and fixtures, because that's what we named the last one we did, furniture and fixtures. But the type is the tax form section is going to be accumulative depreciation, and we're going to name it depreciation. So when we do that, if you come down here, you see that it's indented under your last entry where it's furniture and fixtures. Now, the last time we did this, this was under the fixed asset. We've already created the fixed asset. We created the fixed asset and named it furniture and fixtures. So now we need to record the depreciation for that particular fixed asset. So that's why we're going to save it under account. We're going to save account under furniture and fixture because we want to link the depreciation to that asset. And that's what we're doing here. And when you go to fill in the amount, you don't have to put the negative in. You just put in regular 10,000. It knows because it's a depreciation account, because we selected the tax form section. It knows because it is a depreciation account to go ahead and put in that negative automatically because it knows it's a contra asset account. Okay. The next account it wants us to open up is a long-term liability account. So again, before you go create any new account, you always want to make sure you don't have one already set up. So I have a notes payable set up already, because like I told you guys, I recycle this company a lot. So I don't have to create a new account. It's already there, but I do need to create my open balances. So I'm going to go ahead and click edit. So it's already got it set up under liability. So if you're creating a new account, you're going to create new, you're going to select liabilities. You're going to save under long-term liabilities. For detail type, it's going to be notes payable, and then you're going to name it notes payable. So again, you do now is we need to modify our opening balances and our start date. So we're going to go ahead and change our start date. I'm going to make sure and enter it. And then we're going to, the opening balance it wants is 60,000. Okay, so we're going to go ahead and enter 60,000. And once you have all that information in, you're going to click save. And there's our notes payable. All right, so the last one we're going to look for is we're going to look for our equity account. So we're going to do a search for common stock. So you see, I actually have two. Probably need to get rid of one, but that's okay. So I'm just going to go over here. And the reason it allowed me to do two is you see I have a little asterisk right there. But I'm going to go ahead and modify this one. I'm going to go ahead, drop down menu, hit edit. All right, so I want you to look. So if you are starting from scratch and you don't have all of these set up, I want you to look at, when I click on edit, what this box looks like. You're going to click on equity. So you're going to save under equity, common stock, name it common stock. Okay, put in a description if you need to. And then go ahead and click down on drop down menu so you can do your starting date. Click other, 12/31/2023, and the amount, which is $1,000, and then click save. All right, so how do you get rid of an account you don't need? Come over here, click make inactive, and when you do that, it gets rid of it. So little trick there. All right, so now we've got all of our account balances set up. So that is step 2 done. Next, we're going to go to step 3, and it wants us to enter some products because we are a surfboard distributor. So we need to create inventory, don't we? All right, so how do we do that? You come up here, you go to your gear icon, products and services. So right now I don't have any. So we need to create some. So how do you do that? Simple, click the new button. All right, so if we're going to be selling products, we're going to select inventory. All right, it tells us what to name it. The first one we're going to do is called a Rook 15. All right, it does not have us entering anything. We don't have any categories or SKU numbers, pictures, or anything. If you guys want to get creative with that, have fun. Go for it. I say play around with some of this stuff. The more familiar with it you are, the better. But the items that have an asterisk are items that must be filled in. Okay, they must be filled in. And it does give us information it wants us to use. So it says the initial quantity on hand is 10. It wants us to continue using the 12/31/2023 date. Now, the inventory asset account, it wants us to use inventory asset. And then we scroll down and it says this account, inventory asset, this account will automatically be created in the chart of accounts when you add this product, okay? So you don't have to go in and create a new account. So when we create this product, it's going to automatically create inventory asset account. All right, now the sell price is $650. The cost is $400. And the income account it wants you to use is sales. Not sales or product income, just sales. So you will need to change that. And the expense account we're going to use is cost of goods sold. All right, so once we have this information filled in, we're going to hit save and close. And so we see here we have our first inventory item right here. All right, now it has a second item it wants us to enter for product, another product. So we're going to click new, going to click inventory. Now the name of this product is called the Water Hog. So the Water Hog quantity on hand we have is 8 as of 12/31/2023. The sales price of the Water Hog is $860. The cost of the Water Hog is $500. Our inventory asset account is already filled in. We do need to change our income account to sales, but our expense account is good because they do want us to do it to cost of goods sold. So everything looks good. Everything matches what I have on here. save and close. All right, so that is 3A done. Now let's go to 3B. We have a service. So let's click on new again. And instead of inventory, we're going to go down here and we're going to click on service. All right, so this is where we're going to provide a service. So we are a company that sells products and provides a service. The service that we're going to provide is called consulting. So we're going to name that consulting. And the rate for consulting is going to be 25. And the income account we're going to change that. And we're going to look for service, which is right here. Service fee income. All right. All right. Okay, let's see here. Oh, we're going to change that. All right, let's change that. All right, so here it wants us to use an income account that just says services, period. But we don't have an income account set up that just says services. So let me show you how to set one up real quickly from this screen. So you're going to scroll all the way up and you're going to click add new. All right, when you click add new, we're going to add a new account. Now this box should look familiar because this box is similar to that that's in your textbook. All right, so the account type is income. The detail type is going to be service fee income. And we're going to then name it just services. And then click save and close. All right, so that is what we're going to do it as. So it's already selected it here. So your income account is services, which is what it wants it to be. So now we can hit save and close. And if we see here, we have a new service called consulting at a rate of $25. Now, the next thing we're going to do is we're going to make changes to the following accounts, your accounts receivable, prepaid expenses, and accounts payable. But we're going to do all of this as a journal entry. A journal entry. All right, so I went back to the home screen. So how do we do a journal entry? Now, again, why are we doing a journal entry? I want you to think about this for a minute. I want you to think about this as the business owner. We are starting a business, and we're starting a business with some assets, some liabilities already, on hand. We're already starting out with this stuff. So we're just manually recording what we're starting out with. And that's why everything's going to have the date of 12/31/2023. When we start actually doing some business transactions, we'll be using other dates. But what we're doing right now is we're starting our business from scratch. So now we have some accounts receivable, some prepaid expenses, and a payable that we've already have, and we now need to put it on our books. So we're going to have to do it manually. And so we're going to do it with a journal entry. How do we do a journal entry? All right, so we're going to come up here where it says plus new and click on plus new. And we're going to come all the way here. It says other and go down and select journal entry. Okay. So we have a journal entry we're going to do. Now, the first thing we're going to do is we're going to change the date. It's 12/31/2023. And we're going to change the journal number to number 1. All right. Now, this is when you got to put your accounting cap on. Yeah, accounting cap. Accounts receivable. Receivable is an asset. Assets are recorded with a debit. So we're going to go ahead and look for accounts receivable. And we're going to record our debit, $5,000. And we're going to come over here and we're going to select our customer. Now, if you don't have these already set up like I do, you would click the add new. And this window is going to pop up and you would just fill out the information. So at this time, the only thing we would have would be the company name and that they're a customer because you have a drop down menu you can select. So the only thing we would have would be the customer's name and contact type. Okay. And that's how you would add new. But I already have mine entered. So I'm going to go ahead and select the customer that this receivable belongs to. So this receivable belongs to one of our new customers called Blondie's Boards. All right, prepaid expense. Prepaid expense is also an asset. Assets are reported with debit. So let's look for our prepaid expense account. Now, how can you do this? You can do this by scrolling like I'm doing here. Or you can start typing in the name. Okay. So now, again, if you don't have this account already set up, you can click the add new, and this box will open up, and you can create the account you need. All right, but prepaid expenses is already set up for, so I'm going to go ahead and click prepaid expenses. Now it's going to try and autofill the credits in. So when it does that, you just delete it out. All right, there we go. So we enter the 3,000. Now, the third item it wants us to enter is a payable. A payable is a liability. Liabilities are recorded with credits. Initially, you record a liability with a credit when you set it up. So we're going to go ahead and select accounts payable, and we're going to enter the amount for the payable, which is $4,500. All right, and this payable is to one of our vendors called Channel Islands. So we owe $4,500 to Channel Islands right now. So what do we are recording so far? We're recording a receivable for Blondie's Boards. Blondie's Boards owes us $5,000. So we're going to set up that receivable. We're going to go ahead and link it to that customer so that we know on our subledger for that customer, they owe us money. We're going to record a prepaid expense. It doesn't give us any details of what that prepaid expense is. It just says prepaid expense. So we'll have to just do that. And then we have a payable. We actually owe money to one of our vendors called Channel Islands. So we're going to go ahead and create that payable. Now, it tells us to make changes to the following accounts via a journal entry with our offset to the opening balance equity. All right, so our debits and credits don't balance, do they? So when it says your offset is going to be to the opening balance equity account, that means that you're going to create an entry to that account, and it's going to be a credit entry. It should be about $3,500. So we're going to look for this account. There's our opening balance equity account. And guess what? It auto-filled it in for you. You didn't even have to do any math, which is awesome. All right. So once that's done, you just click save. Journal entry 1 is saved. So we've got step 3, C, done. So now we're ready to go to step 4. So we're going to close this out. Step 4 is to close the opening balance equity account to retained earnings via journal entry 2. So first things first is we have to figure out what is the balance of our retained earnings account. All right, so how can we do that? Well, we can do that one of two ways. But the easiest way is I just go to my chart of accounts. And looked for my retained earnings account. Not my retained earnings, my opening balance account. And basically close it out there. And you're going to do that via a journal entry. Okay, I had to make a quick adjustment. So the best way to find out what your opening balance equity account is to basically go to your chart of accounts, scroll down to your opening balance equity, and see that it has a $5,500 balance. Now, it is an equity account. So again, we got to put our accounting thinking hats on. Another thing you could do is you can run a report. This is the second way to do it, is run a report. So this might be easier. So what I was going to say about put your thinking caps on is this is an equity account. Equity accounts hold a credit balance. Okay, if we remember correctly, going back to Financial Accounting 1, equity accounts hold a credit balance. So if we're going to close out equity and close it out to retained earnings, okay, so you're going to have to do a debit to your equity account and a credit to your retained earnings account, because if it holds a credit balance, then you have to do a debit to close it out. So, but this method of just like going to your chart of accounts to see what your balance is for your opening balance for equity is confusing. Another way you can do it is go to reports, go over here and just click trial balance. And you're going to make sure you change the dates. Ignore that information. Again, I told you guys I use this company. You should have nothing up here until you change the dates. But I want you to change the dates to 2023. So December 31st, 2023, and then click run reports. So right now, this is everything that you've entered thus far. So to find out what your opening balance is for equity, you will scroll down here and you'll see that you have a credit balance of $5,500. So for step 4, it wants you to close that account out to retained earnings via journal entry 2, dated to December 31st, 2023. So we see we have a credit balance of $5,500. So we're going to do a debit to our equity account and a credit to our retained earnings. So let's go ahead and click new, select journal entry, go ahead and change the date. And wants you to use it journal entry number 2. All right, so let's go ahead and select our debit account, and we're going to scroll down and look for our opening balance. We know it's $5,500. Now we're going to select our credit account. It wants us to close it out to retained earnings. So there's our retained earnings account, and it goes ahead and it auto-fills in your credit. So again, step 4, close the opening balance equity account to retained earnings via journal entry 2. So we went in, we ran a report, we did a trial balance, just a real quick trial balance to see what our balance was for our equity account. It showed that we had a credit balance of $5,500 in our equity. So we're going to close it out. We're going to close it out with a debit. So we're going to debit equity for $5,500 and offset that as a credit to retained earnings. Once that's done, save and close. Journal entry 2 is now saved. So now we're going to do that trial balance for real. So step 5, it says prepare and print a trial balance report as of December 31st, 2023. So I want us to go back and look at how to do this. So what I did was I went over here to reports and I just clicked on reports. That's what I did just now. Okay, that's what I did just now. So you're going to have a list of reports. You can scroll and look for your reports, or you can come up here and find report by name. So you would just start clicking in trial, and there it is, and you click on trial balance, and I'll take you to that report. All right. The only thing you're going to modify here is the date. You're going to put the date is at 12/31st, 2023. Right there, and you're going to click run report. And this is what your trial balance should look like. Now, in your homework assignment, it gives you your case 1 trial balance and figure 3.15. So you should be able to look at your trial balance in your homework assignment and your trial balance in QuickBooks Online to verify that they match. Okay. If something doesn't look right, then that means maybe something got entered wrong, and you need to go and fix it, and that's totally okay. But you want to make sure that you see all your accounts listed and the correct amounts, and they're in the correct debit and credit column. Now, once you are verified it's all good to go, it says to print, but I need you guys to export it as a PDF. So let me show you what I just clicked on again. I came up here and I clicked export, and we're going to select PDF, and you're going to save it as a PDF. And that is what you're going to upload for your assignment is a PDF. It does say you can do it as an Excel. Do not export it as an Excel because it does not save the values. So when I go to pull it up to verify you did your assignment correctly, I won't be able to see your values. So I stress you to please export it as a PDF. Now, if for whatever reason your numbers do not look right, that means you need to change something. How can you do that? Well, you look as I roll my mouse over the trial balance report, you see hyperlinks. You can actually click on that hyperlink and it'll take you directly to a transaction report for that account. And then it gives you more detailed information so that you can see maybe where you might have entered something incorrectly. So once you've exported your trial balance as a PDF, I need you to prepare another kind of report. So this kind of report is going to be called a transaction detail by account. I have mine saved as a favorite. So it's right up here at the top, but yours won't be. So again, to be able to find that report, you just start typing in the name and it'll show up. So you will need to modify the dates. So far, the only date we've used is December 31st, 2023. So we'll continue using that until it tells us different. So once you run this report, now an example of this report is not in your homework assignment. The main thing that's really important is that trial balance, but I also want to see this. So I'm going to ask that you also export this as a PDF and upload it as part of your homework assignment as well. And so once you're done, that's it. That is it for your first assignment. I'm not going to do a second video for case 2. I feel like this video is enough to be able to understand how to do both cases. If you have any questions or concerns, please feel free to email me.